Why is nobody talking about AMD? AMD has had a flurry of good news recently, and I believe it's time to give it some serious consideration. Hi, my name's Gautam. I'm a former finance executive turned options trader, and I'm here to help you escape the 9 to 5 grind like I did with the power of options trading. If you'd like a copy of my free ebook that covers my top option strategies to help you retire early, hit that like button, subscribe to my channel, and comment down below, and I'll respond to your comment with the ebook link. Also, don't forget to sign up for my free options newsletter, link in description below. So let's dive in and see what's been happening with AMD. AMD just crushed expectations with its Q1 2025 earnings, reporting 96 cents earnings per share and 7.44 billion in revenue, a nearly 36% year-over-year increase. This company is clearly riding the AI wave and delivering results. And here's the kicker. Just last week, the US eased chip export restrictions, opening up even more international growth opportunities for AMD, especially in high demand regions like the Middle East and Asia. Just yesterday, AMD also struck a game changing 10 billion deal with Saudi Arabia's Humane to develop 500 megawatt of AI data center infrastructure across Saudi Arabia and the US. This move massively boosts their global footprint in AI computing. On top of that, just this morning, AMD announced a massive $6 billion stock buyback, signaling major confidence from the leadership and a commitment to returning value to shareholders. Obviously, analysts are responding positively to these developments. BofA Securities analyst Vivek Arya increased his AMD price target from 110 to 130 and reiterated a buy rating. Similarly, UBS maintained a strong buy rating with a price target of 150. The consensus among analysts suggests a bullish outlook for AMD's stock performance. All of this points to one thing. AMD is positioning itself as a dominant force in AI and high performance computing and would make a good stock to add to your investment portfolio and run the wheel strategy. Next, let's talk about the wheel strategy. And the wheel strategy is exactly what it sounds like. In the first step of the wheel strategy, you collect premium by selling put options on your favorite stock. So let's say Apple's currently trading at $200 and you sell put options at a strike price of 190. If Apple stays above 190 by the expiration date, the premium is yours to keep. If Apple drops below 190 by the expiration date, you will be assigned the Apple stock at a strike price of 190 no matter how much Apple's trading at that point. Once you've acquired the stock, the next step is to sell covered calls and collect additional premium. As you continue to sell covered calls, once the price of the stock exceeds the price of your sold covered call, you will be exercised and your shares will be called away, and you will collect additional premium from the stock price appreciation. So now that you understand how the wheel strategy works, let's check out the AMD options chain and see how we can make $10,000 a month running the wheel strategy on AMD. I have the AMD options chain pulled up on Robinhood. And first thing we're going to do is click sell, put, and I'm going to go ahead and go to the May 23rd options chain, which is next Friday. It's about 9 days out. So let's come down here and see. I generally like to sell put options within the 15 to 20 delta range. So let's see what a 20 delta would be. If we look at this 111 strike price, that's a 20 delta. And right now, a 20 delta is giving us a premium of $1.02 or $102. Now, since this premium is based on 9 days out and we want to do this weekly, I'm going to go ahead and reduce this premium just for our calculation's sake from 102 to 95 cents, assuming it was 7 days out. So I'm going to go ahead and select this options chain right here, hit continue. And let's just say we do 15 contracts at 95 cents. Again, I'm reducing this to 95 cents because, I want to show this calculation to you as if we were doing this weekly instead of 9 days out. So 7 days instead of 9 days. If we go with a premium of 95 cents, that would give you 14.25 in weekly premium. Now, obviously, we have 4 weeks. So if we do 14.25 times 4, that gives you $5,700. So that gives you a monthly return of $5,700 just selling put options each week on AMD. Now, let's say you get to week 4 and you get assigned AMD at this strike price, which is 111. So now you own the AMD stock. And for sake of ease, let's assume that AMD is actually trading at 111 at the time. So now that we have the AMD stock in our possession, for the next step of the wheel strategy, we're going to go ahead and start selling covered calls and collect additional premium. So to do that, I'm going to go ahead and select sell call. So remember, we're now selling calls, so I'm changing it from puts to calls. And assuming that we're going to sell a delta of 15 to 20 on the covered calls. Let's look and see how much premium we can collect. If I go with the 127 strike price right here, this is almost a delta of 20. I'm going to go ahead and select this options contract right here. And again, I'm going to go ahead and reduce this to 95 because we're going to look at it on a 7-day basis instead of the 9-day selection that I have right here. So again, staying with the 15 contracts, if we sell 15 contracts each week, we're going to collect $1,424 on our covered calls. And actually, it's the same as the puts. So 1425 times 4 is going to give us $5,700. We collected $5,700 earlier by selling the cash secured puts, and we collected an additional $5,700 by selling the covered calls. So if we add those up, we end up with a total of 11,400. Now I'm a numbers guy and I like to put everything in Excel and see how it pans out. So I have my Excel spreadsheet pulled up right here. And let's look at all the steps. So for step 1, we sold 15 contracts at a strike price of 111. And for the 15 contracts, we had to put up 166K in collateral. The weekly puts were offering us 95 cents or $95 per options contract times 15 contracts results in a monthly income of $5,700. For step 2, assuming we acquired the stock at a strike price of 111 and selling it at a strike price of 120, which I believe was 19 or 20 delta. Again, we're going to sell the 15 contracts, and to sell the 15 contracts with a premium of 95 cents or $95 per options contract, that is $1,425 a week, resulting in a monthly income of $5,700. So assuming you sell covered calls for 4 weeks and at the end of the 4th week, your shares are called away, let's look at how much you would collect in additional appreciation, which is the difference between this 120 strike price minus the 111 strike price that you acquired AMD at. That's a difference of $9. Since we have 15 contracts, this would be 1,500 shares. So 9 times 1,500 shares would give you an additional 13,500 on just the stock price appreciation. Now, if we add up the monthly income from the cash secured puts, the covered calls, and how much you made from the stock price appreciation, that gives you a total of almost $25,000. And again, let's assume that it took you 2 months to do the whole wheel strategy and you divide it by 2. That's almost 12,500 per month, which gives you a monthly return of 7%, which is fantastic. If you enjoyed this video or learned anything useful, please give it a thumbs up, share it with your friends, and leave your comments below with any questions or thoughts. Thanks for watching, and I'll see you in the next one.